Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Happy Friday. We got a lot of things on our radar today. The S&P sold off hard this morning. Major four-star resistance. We've had this level out there for a couple weeks. 2679.75. Failed right against it. Now, we've also talked about seeing this level getting taken out intraday on high volume. Look for that. That would encourage a breakout and send the market 20 points higher. That wasn't the case. We failed, and we saw the market pull back nearly 30 points from that level. It did go quite a bit lower than we would have thought, testing the overnight low at 26.52. Market is stabilizing. We've gone through the European close. European markets finished slightly in the green. It's been good for the S&P as that stabilized the market, trading right around the 2661.75, 2664 level. We think it could try and test as high as 2668, 2669. See what's up there, and if there's some traction, we could have a good finish, good second half to the session. If we don't have any traction, we could start to see some selling. Remember, there is headline risk. There's a lot in the news cycle right now ahead of the weekend. On top of that, Boston Fed President Rosengren, he was more hawkish than expected. That was a catalyst this morning. Michigan consumer sentiment missed. That was another catalyst this morning. But going into the weekend, the Syrian conflict, as well as the trade war with China back in the mix, a lot of this is right there, and it's going to make people nervous if this market cannot find that traction and really regain 2670. Moving on, crude oil is also on our radar. You know, we've been bullish. We've been talking about managing risk, not only here on the midday market minute, but also in the morning express. You have to capitalize on these moves, and then that gives you the ability to trade a little bit. You can always re-enter, manage your risk, use stops, but the market's trading really well. It's priming to take out that overnight high. We could see a move out above 68, at least a spike. May not stay up there, but look for this constructive price action through the day to be bullish through the rest of the session. We like crude oil. We remain bullish, but it's important to watch the news over the weekend. If we don't have any of that geopolitical tension rising, we could see crude reverse Sunday night into Monday, so keep an eye out for that. Gold is also bouncing back. Really ugly stop run in gold. It traded down to 1335, but that's the capitulatory type of action that it needed. Didn't really capitulate in the sense that a high volume move, but it took those stops, reversed higher, and now we're looking pretty decent on the session. We talked about in the morning express, a close out above 1348 area would get us excited in the very immediate term, but we've remained long-term bullish gold. That hasn't changed. It just failed at major three-star resistance this week, and again, another spot you had to manage risk and take something off the table, up at 1367, 1370. Still, constructive price action. Again, want to see this close above 1349. Give us a call. We're here to talk about the landscape and all of this, silver, natural gas, and as well, we have an agriculture desk. We're here to talk about any of this. 312-278-0500. You can email us, info@bluelinefutures.com. You can sign up for a free trial of our research on our website. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.